really, I would like to see your questions coming today. It's a key data. They are key data, of course, is NFP. So we need to see how the market will respond, especially such a volatile day and a week, sorry, as this one. Once the live begins, look into gold. No, it wasn't gold, it was Euro Swiss. I just want to be the first person to comment as always. Okay, nice, nice, nice. I'm glad you're here, dear. For some reason, I cannot see your question in the rest stream, but I think there might be some delay in the chat or something. I don't know. Okay. So, Emmanuel, I can see your questions, but unfortunately, there is a delay. But you are the very first person commenting, so don't worry about it. Okay, Emmanuel, yes. Wait. Yeah, there is a lot of delay. If that was your first comment, there is a lot of delay. So, guys, just a second, just a minute before the NFP. So I will bring my agenda on, the calendar, obviously. Let me know whether you can hear me, by the way, because I did some changes and I'm struggling to double check whether you can hear me or not. For the time being, because I was a bit delayed due to some technical issues, I will just stick over here the calendar because I want to see together the results, okay, as usual. Hopefully you can see me from all the social media. Hopefully, I don't know, but no, apparently something wrong with Facebook. Okay, so I will just enable it manually. So data are out, that's perfect. Perfect, that's good. Let me just comment on that. I want to just... Okay, so, a bit. Let me zoom this in so you can see it as well. 253,000 from 179,000 expected. Last time it was 165, revised from 236,000. Jesus, that's a big revision, guys. So it might be interpreted negatively by the markets. It definitely beat expectations, and it was really, anyway, it was in an upside risk after the surprisingly strong ADP that we've seen on Wednesday. But that revision is also significant. It was 236,000 last time, and on the revision, it came somewhere in the mid, so like half, which is that means that less job were actually created last month, and from 236 we're down to 165. Nonetheless, it beat expectations. Average hourly earnings increase. Always remember that this means that people they saw a slight increase in their hourly rate. Participation rate unchanged. Unemployment also is a bit, just a 0.1%. So that's a solid and a tight labor market still. No one is commenting. Are you facing any problems on commenting, or is it just a delay? Guys, I'm here to help. I'm here to discuss with you the result, but most important of all, I'm here together to do a live analysis and see how the markets reacted and what's the overall trends, or what the intraday bias, and also analyze the assets that you want, that you like, that you mostly trade in, etc. So what that means, without seeing the breakout, to be honest, the breakout of the report, I will say that this is bad for the Fed. This is bad for the Fed. Why? It still shows a solid labor market. It still shows more jobs, which at the same time, and we still have a high inflation. So these two don't go along. we consider also the aggressive tightness of the Fed, having still a strong, solid labor sector implies that there is some further support to the inflation. So it's a big barrier, inflation still, to bring inflation down. So that means that after the 25 points that we've seen last on Wednesday, when was it? That just confirms that we will see more, especially we'll see definitely more in June. So uh, yeah, that definitely, this is not what the Fed wanted. Most probably the Fed futures could show that the odds for another 25 or even 50 point hike next month um, uh, is in play. So the market's already priced in the June rate anyway, but now we might see some scenarios and some rumors about 50 points. Indicators everywhere. You referring to my chats back well, or are you or sorry, I will delete some, I promise. Okay, so Canadian data were also down. Employment change 41.4, beat expectations, double than expected. Participation rate the same. Unemployment slowed down a bit. But anyway, Canadian Bank of Canada is in a very different stance since they start increasing rates anyway. So until I have a breakout of the NFP report, to be honest, and in order to have more to discuss about what that means, I would like to check with you the very first impression from the market. So yen. It's Friday, excuse me, and it was a very busy week as well. So dollar spiked at 101.52. The reaction over here looks a bit muted, to be honest. It jumped indeed. This is a 30-minute chart. It jumped indeed on the announcement, even though I'm really sure that it was before the announcement, 5 minutes. No, it was on the announcement, sorry. So on the announcement, but it didn't manage. If I zoom out a bit, you see that it didn't manage to break yesterday's peak, and 101.50 is anyway the first resistance of the day. I was expecting an even higher spike, or in general high, really big candle on the announcement. But this is a clear indication that markets are still thinking about it, because as I said, yes, indeed it beat expectations, but that just strengthened the odds of further aggressive tightness from the Fed. And that, I mean, there's a lot going on. The further rate hikes are not desirable, for sure, and that's because we having a bank crisis, banks failures. Remember on Monday, as I said in my live analysis on Wednesday, JP Morgan bought First Republic. The last 2 days, we keep having statements and announcements about First Horizon, PacWest, Western Alliance, and that they were thinking about a possible sale deal as well. So all these have brought back the banking crisis and the possibility of further banks failure in play. So that's why sentiment is really weighting in some of in the markets. So 101.50 indeed broken just now the yesterday's peak, but it's key to see whether this will be sustained, because solid labor market, the still solid labor market, comes in contrast with the actually strengthens the possibility either of a stagflation or a proper recession for the US. Yeah, let me just see a bit. Yeah, there is no sign of slowing in the labor market. So next week we're gonna have inflation as well, inflation numbers. So this is putting some upside risk still to the inflation. Um, that actually is just makes the inflation figure next week even more important than they currently are. Um, so the last the so let me just check something. By the way, I see only Emmanuel commenting with his USA 100 and S&P 500 chart. Please, this is your session. Feel free to ask anything you want. Feel free to ask me for to analyze any asset that you want me to analyze in any kind um, uh, of time frame you wish. Okay, so payrolls was supposed to move downwards this month, both because of jobs growth have outpaced the GDP path since 2021, and GDP growth is likely to slow. But it seems that we have this surprise with the NFP moving higher, beating expectations, but revised lower for last month. Uh, Slight increase on the hourly word growth. Uh, yeah, that's not good news for sure. For sure. Okay, until we have further data out, I will go to Emmanuel and Nasdaq and S&P. Let's see how Nasdaq reacted. That's a bit muted. Tim, there is some muted reaction. Muted reaction. Let me just see. Okay, this is you asked me S&P and Nasdaq, right? So this is Nasdaq, dear Emmanuel. Okay, very confused. Tumble lower, then quickly turn back to the area that it was the past hour. Let me put the. I know that you asked 4-hour chart. Give me a second. I want to just double check something in intraday, because what I can see, and this is what I was guessing actually, on the news, the markets don't know how to react yet, at least because it was just 10 minutes ago. So you see, there was some kind of a pullback, but it quickly turned back to where it was the last 2 hours. Yeah, let me check, double check also S&P 500, same muted reaction. There is a bit of a confusion apparently in this announcement. The only dollar spike higher, but that should be that might be, no, it should be, that might be limited. Undoubtedly, as hawkish as Fed was, this definitely doesn't trigger for a pausing right now. They won't pause, but they cannot have it based on this data. the job market doesn't cooperate. Job market isn't cooperating at all. Um, yeah, I'm quite surprised. So, my dear friend Emmanuel, you mentioned S&P 500 and US oil and US and Nasdaq, and I should give it to you. So, for our chart, So, okay, let's take it step by step. Let me delete my intraday indicators just to stick on the 4-hour ones. Here we are, tumbling for 1, 2, 3, actually for the whole day, tumbling between my pivot point and the first support of the day. So it's within the 30,000 territory and 13,150. Can you see these levels, guys? So this is a Nasdaq 4-hour chart, okay? So with the use of the channel, of the regression channel, which I need to change the deviation, is way too high. 150, even one might be even better. Yeah, that looks just fine. We can see that Nasdaq has been to the downside since the end of April. And that looks still to be the case. I mean, to still be dominated by bearish buyers rather than bullish. But something interesting is happening the last 2 days. It came back and we keep retesting for 2 days in a row the 50 period moving average. However, the fact that we keep having failure of breaking the 50 and 20 day moving average remains up below the upper trend line of the channel. You see, it's complying with the channel. It's keep posting lower highs, lower highs, lower highs. That implies that bears are still in control in the medium term, since you asked me for a 4-hour chart. So this boost that we have seen the last since yesterday afternoon looks to be limited, dear Emmanuel. Why and how you can see that? RSI is still below 50. MACD, even though it improved a bit, is still negative. So as long as we don't see the Nasdaq breaking either the trend line of the 50 period moving average or the 20-day moving average to the upside and closing a 4-hour candle above these three, there is a confluence over here, then the scenario remains the same. And what's the scenario? The scenario is for every lower peak to imply to another dip to the downside. And I will zoom in because it's Friday, so it's nice on Friday to do a review, sort of to be prepared for the for Sunday's open, Monday's open, depends on where you're placed. Look at that. As I said, we have some kind of a confluence of 50 period moving average, a 20 period moving average, and the upper of the channel. So if this continues, we might see 20 period moving average, so the gray line, crossing below 50. So that would be a bearish cross, confirming the extension to the downside of this down channel. So what you can do, I'm not sure whether you have participated in our analysis, in our webinars, actually not only swing trading webinars, but also multi-time frame trading, etc. If you use lower time frame, just 1 or 2 scales down, no more, you can trigger and appropriate signals when to enter and how to enter the market. So the 1 hour, since we analyzed the 4-hour one, the 1 hour chart, one scale down, it will give us more clues, more indications. So for the time being, there is nothing. It's just a very dodgy candle, long tail to the downside. MACD is 0, RSI at 57 and flatten. So you need to be a bit patient, I'm afraid, dear Emmanuel, until you either see a nice, strong, bullish candle closing above the resistance area that I just mentioned, or a bearish that could signal the beginning of another decline for a Nasdaq, such as this one, such as this one. So if the asset comes below 13112, so we have a close candle, okay, close hourly candle below 13112, then that would be the very first indication that the asset could return back down, breaching, potentially breaching the low of the day, and might continue the upcoming days um, to retest the 13,000 territory. Hopefully that covered you, Emmanuel. Let me know if not. And hopefully everything's okay, because I don't have a lot of comments today, and I'm worried that something is wrong from the technical perspective. Let me double check whether you have actually received the push. Let's see. Okay, push has been sent, so I don't know. Yeah, the same stance with S&P 500, Emmanuel. 1 hour chart, you can see a very dodgy candle flirting with the first resistance of the day, but there is a lack of steam to the upside, so this looks to be another limited bounce, and this might be an indication that the asset is might as soon as it could reverse to the downside again. So initial support for for S&P 500, sorry, is the low of the day 4076, and if that breaks, then the next support could be seen at this double fractal, or slightly below this double fractal, 4050 level. Okay, pivot points help a lot, guys. Okay, if you don't know how to use them, please check our webinars. Okay, so there is some intraday biases in S&P 500. Okay, yes, we've seen a rebound since last night. Stochastic grows higher, RSI the same, but still below pivot, below 50, MACD way below 0. Stochastic is just a 30 minutes indicator, nothing more than that. So there was so far an intraday positive bias, but the overall remains under pressure. So if I check the 30 minutes chart, yes, there was this bounce since Asia opened this morning, but we cannot be sure whether it will be sustained. There still might be a possible retest of the 200 period moving average. It is possible because the moving average are keep pointing higher, but this candle has not closed yet. We are another 80 minutes to go until that close, and as soon as this 30 minutes candle close, we can have a clear view of whether it's stalled at 4100 or whether it will boost it higher. It's all this confusion, I'm afraid. It's all this confusion that people cannot interpret what that means. But the S&P today, the NFP today, uh, what they just point is that more hikes, so more risk for the economy to stabilize, more risk for further banking failures, and further uncertainty in regards to the inflation, because inflation is next Wednesday, and this solid, stubbornly solid, tight market, tight labor market, a stronger labor market, sorry, it might hold inflation high, not necessarily to increase inflation, but to hold inflation high. Mm. US oil, I will go to US oil for Caputo. US oil it was key this week. 10% down in a single week. And this is massive. Um, the fundamentals are keep supporting, as I said on Wednesday, uh, uh, this downtrend that we have seen in oil for all reasons that I mentioned. I mean, higher interest rates and etc. But you can see me tell to me, yeah, high interest rates is something that we have seen in March, in last year as well. Yeah, you're right. But we have some some disappointing data from China as well. We had some. Um, which is the factory orders, manufacturing orders. We had plenty this weekend. Right now, I'm just so confused that I forgot about it. It was a factory. It was manufacturing PMIs that disappointed, and what else? What was it? Services PMIs also disappointed in contradiction and contraction territory. So that adds to the fear that Chinese economy is not recovering, or even if it recovers very very slow, and that brings the demand for oil into risk. Before I analyze oil, I would like to share the thoughts of Emmanuel. I think the inflation data will be significant. Yes, yes, not only for to be honest for S&P. Yes, definitely for stock markets. Uh, Unless if they surprise us, but in dollars keep moving higher, but there will be actually you're right, it might not react, it might not manage to give S&P might not give a direction to dollar, but it could have a significant impact to the stock markets. They are very sensitive. Stock markets, equity markets in general, are very sensitive. Lately, especially this week, especially with the rumors about Back West, Western Alliance, and First Horizon concerns. So yeah, that could affect S&P 500. Of course, I agree with you. Unless if they surprise us, but with NFP, I started believing that we might see inflation either unchanged or slightly tight, slightly higher. That's not good, neither for us as consumers, neither for the companies, neither for the central banks, obviously. Okay, I'll come to you in a second. I need to finish with US oil and Kabuko request. So, dear Kabuko, yes, remains to the downside. As I said on my morning talk, on my morning's article, uh, and on Wednesday, if you were with us, the momentum is increasingly bearish, increasingly negative. That any bounce, such as the one that we've seen yesterday or the one that we've seen so far today, it looks to be just a correction in this sharp decline that we have seen. You said for our chart though, so I should comply with what you said, right? So, and you're absolutely right. I asked you to tell me any time frame as well, so I will put my favorite Fibos as usual, just to see. So there was first of all, let me. I'm sorry. I said I will just clear this mess, and I should do it again. So this is a 4-hour chart. 4-hour chart, nice smooth rebound, failing though, can you see, I will zoom in, failing to extend and come somewhere in the middle of this latest dip. And over here, can you see that we had a bit of a squeeze price movement? So this zone, DR Kabuko, it could be a nice resistance level in which the asset failed to breach. Oh, more comments are coming. So it seems that people entered a bit late or received the push notification a bit late. So you see this area, nice. So apparently this area that I just highlighted is also the 38.2 Fibonacci level. So regardless of the correction that we have seen yesterday and today, which was seen by a doji candle and a bounce today, uh, uh, despite that, it didn't manage to uh, breach this area yet or even break it. Can you see how massive MACD lines are? This just presents how how the increasingly bearish movement, bearish bias that we have, the increasing selling pressure that we have. So this looks to be, for the time being at least, my dear Kabugo, a technical correction of this sell-off. And I would like to drive your attention also. I didn't do that properly. Now it's a bit proper. So decline in RSI, complying with the decline in the prices, complying with a turn of MACD into negative. And you see, MACD is not only negative, but is increasingly negative. All these agree and confirm a bearish outlook. So, my dear friend, this looks to be a technical correction with resistance at 7160. Only a move above this area, but more precisely above 73. Let me just be 7360, which is the 50% Fibonacci level and the 50 period moving average. So only a break of that level could suggest a reversal of this nearly 3 weeks decline. So for the time being, this looks to be a retracement level. Hopefully that's clear. So there is further steam to the downside. This looks to be a retracement level. And look at that, the fact that we had such a bearish bias, okay, so bulls supported it and bring it back to the open price, but it was oversold anyway. So it's not bulls, it's just people closing their selling positions. So it's not always a doji candle with a big tail is not always an indication that bulls or bears are in control. Sometimes it's an indication that people closing their positions because of oversold extreme conditions. So yeah. So to the downside, the latest floor and the 68.40, the 63.50 remain key handles. If you need an immediate support level it obviously is the 68.4, right? And the very next one, you should find the mid of this gap. It should be somewhere about 66. You can find, just measure it and find the mid. I'll look start it somewhere about between 66, 40, 30, somewhere there. I have two running positions on dollar yen now. It is running in profit. So my question is to your view, should I hold it until market close or get out? So I guess, so you didn't tell us first of all. First of all, okay. Two running positions. I guess if you were long, you were long. I cannot tell you what to do, I'm afraid. I could if you were next to me, we had a chit chat like friends and etc. But I cannot give advice. It's prohibited by regulators. So what I will do, and you will make your own conclusions, dear Gufe, is analyze, stating what's going on. Okay, one dealer replied to you, but I cannot say whether he's right or wrong. But yeah, I will just let me analyze it. Guessing that you were in a very short time frame because you said that you were in profit. So I guess you see this jump on the data, you try to benefit on it, right? Or unless if you join afterwards. What time was your comment? Let me see what time was your comment. Your comment was 10 minutes ago, and this is a 15 minutes candle. So yeah, you might have a long position. So the thing is that dollar yen, even though it jumped on the dollar strength, I don't know. By the way, I don't know which time frame you're referring to. So I will just say, I will go to the 1 hour chart and just state that we've seen a bounce, okay, we've seen a significant bounce, but the asset didn't manage to break, to extend above the first resistance of the day. So it did retested it indeed on the data, but right now, if you closely check, it's pulling back a bit. I will put 15 minutes chart, 15. It's pulling back a bit. So we had a nice boost, yes, indeed, a full body candle, sorry, not a full body, but a very strong candle the last hour, but it failed to extend above 38.2. Or at least to come halfway of this downtrend at 35.66. So for the time being, remains to the downside for the week. Okay, remember. So I'll put the weekly, the daily chart on just to see that it had 1, 2, 3 really negative bearish days. Today it rebounded. It found the support at the 50, at the confluence of 50 and 200 day moving average. But as long as we don't see the asset turning and closing the day above 38.2, that implies that it has further steam to the downside. Now, by the way, the daily candle for dollar yen is quite significant because it will give some clues whether we're gonna have a reversal finally of this uptrend, or whether it was it will see a rebound again and an extension of this up channel. So there is a channel over here, and I will prove to you. Actually, see, it's a nice channel since March. So it would be very important to see tonight on the closure whether it will be supported and come back above 20-day moving average and within the channel. So that will imply to a rebound, or whether we're gonna have a reversal of this 2 months rally. A reversal will indicate and bring into the attention 132 level. But for my friend Gufe, I'll get back to the 30 minutes chart, okay? And what I will say is that indeed MACD turned positive. Indeed, we see a massive jump to the first resistance of the day, but this resistance is something that we see being retested yesterday as well. And it's also the 200 period moving average that is a key resistance level. So for the time being, indeed, there is something to the upside, but what worries me is the fact that stochastic started slow down a bit. Can you see? It rose, but since the beginning of the day, it's moving a bit sideways and just crossed. There is some kind of a bearish cross. So there is a bit of uncertainty around dollar yen right now, even though this looks to be a limited move. So what you could do is keep monitoring the 134.65 level. So if the asset 70, let's say, if the asset in this 30 minutes candle or 50 minutes candle, it doesn't matter, it's up to you, um, breaks 134.70 and move below it, so that would be an indication that sell-off could start again. And I agree with what Dile. If you had your profits, just lock them. Lock them. You are in profit, you are good, you managed to do the desire. Just close it. Gold. Okay. A lot of indicators, so I'll clear this mess. Starting with the 1 hour chart, corrected back to 2007 territory. But there are a lot of buts, right? Again, this looks to be a limited move. Stochastic flatten. MACD turned negative, but the signal line is still above zero. RSI already started to point higher, something that indicates that there is some kind of a support in this area. This area held also the whole week, nearly the whole week, actually yesterday and Wednesday. So this area could provide a nice floor for gold. Yeah. Mm. Of course, this looks to be around top, which is a bearish pattern, but we need to see it breaking. So if this area breaks, the 2007, that could open the doors to last 2 weeks bottom. So 2000 and the 1980 territory, That's intraday basis. Intraday basis is a bit mixed. Intraday bias is a bit mixed. There is a sell-off, but it looks that is near to its end. So we wait to see whether we're gonna have a confirmed breakout of 2007. If we have a breakout of 2007, then doors are open for the floor that I said in the 1980 territory. Okay, so I'll go to the daily chart. So for the week, it remains above the 20-day moving average. Momentum is still positive. RSI flirts with 50, not broken it yet. Yeah. So Daily medium term bias neutral, intraday negative, but with indication that is nearly to its end, that this decline is nearly to its end. So we need to see whether we're gonna have a support over here. Um, yeah, just check the 30-minute chart. Yeah, struggling to extend right now. And that is quite logical because fundamentals are not supporting the decline of gold. Actually, gold as a safe haven could find further support on this fear um, that NFP have added for the Fed policy, for the inflation next week, for the banking crisis, for the impact that further interest rate hikes could have on the corporate sector, banking sector, consumer sector, etc. Yeah. So, Mohammed, goal coming. You are way too aggressive, Mohammed. One step at a time. You are either too high or too low, my friend. You are always like that, too high or too low. Try to set small gains every time. Small, not gains, small goals every time. And unless I would like to tell me, by the way, because you're constant here and you keep um, you keep joining us in the live analysis. I would like to know what kind of trader you are, what kind of trading you are following. Are you a scalper? Are you a day trader? Are you what kind of trader you are? Just it will help me to help you even more. So 18,000, that's a long way until there. 18,000 is February's bottom, and in order to suggest that it could retest 18,000, we need to see the asset below 1910 territory. Okay, 1910. 1910 is somewhere here. Okay, actually less than 1910, but nonetheless, yes, we need to see the asset reversing most of the gains that we have seen. Actually, all the gains that we have seen in April, March, and so far in May. For the time being, 20-day moving average, the 2007 territory provides a nice support. Momentum remains bullish in the daily chart, so this looks to be just a limited decline. Limited decline implies to a potential rebound and return back to the 2052. Put your indicators on, measure the recovery or the reversal in order to help you indicating or identifying a nice entry point or exit point. But with even though MACD is negative and fast moving averages are pointing lower, the fact that it's stuck over here, the fact that RSI started pointing higher, the fact that MACD, stochastic, so also flattened and started pointing higher. I don't know whether you can see it. It brings me some questions on whether this sell-off will continue or not. So, if there are no further questions, I will keep it as it is. I will keep today's live a bit short because not many, many of you join. Thank you guys for that value. I was not aware about the double top. Oh, glad to help. I guess it was also the team over here, the guys over here that mentioned the round top you mentioned, not the double top. In the daily chart, there's no double top. There's a round top, but that failed to break the channel, so it's still positive. Very well, Gufe. Very well. So good for you. Good for you. Um, what else? What else? Um, I'm glad that I can see you helping each other, guys, like a forum. What else I wanted to mention? So I have the breakout of the data. Jobless rate fell to 54-year low. 353 payroll rise. We talked about that. Um, yeah, nothing new, unfortunately. Nothing new. Even though I should mention that Powell said that he does not believe wages are the driver of inflation. While there is a slowing in employment, um, it might be not enough to satisfy FOMC. And from what I can see, this is not enough to satisfy FOMC Fed in order to not proceed with another rate hike next month, or either to pause. The pausing is not in the table right now, I'm afraid. So, dollar yen, Gufe. Dollar yen retesting 134.70. So, guys, nice. Let's see what will happen. I'll keep an eye on this floor as well. I have a question about auto charts. Is it able to run it mobile because we can't carry laptops around? So far, it wasn't possible, but I received an email from them, and there might be an option. Let me double check, but so far that wasn't the case. I know that they are trying to provide a mobile version, but I'm not sure whether this is live or is still they haven't launched it yet. Let me double check because I have their um, let me check my emails there. There is a mobile app, by the way, if this is what you're asking. But the thing is, there is a mobile app for auto charters, but whether it will be in HFM 74, I mean, or in the actual HFM app, that's something that is not the case right now. So there is, you can use though their auto charters app separately, checking the signals and apply it to your mobile trading. Okay. I think they didn't provide us yet the integration to add auto charters on the mobile app, trading app. Okay, Gufa, that's a very good question, guys. If there is no further, if there are no further questions, because there's not a lot of uh, because if there are no further questions, I will call it a day. Um, but before I do that, let's double check again dollar, which is look like it's running already out of steam apparently. And Yeah, that was pretty much expected. They would consider the data. This initial jump, it's looking that it's running out of steam. So double check for corrections, double check for signs that confirm the return back to the bottom of the week. Dollar overall remains under pressure, ranging for 2 months, for a month now, is at the low territory that it has been for how many months now? Was no, for the whole year. And you see that is for the last month. It has been to is stuck to 1 year's bottom, and in general there was a very significant decline to dollar index due to the things going on in the US economy and especially the US banking sector. Um, and because markets have already started pricing a potential cut of interest rates by the end of the year, this added to the sell-off in general overall of dollar. Okay, so if you don't have any further questions, I will call it a date. It wasn't as volatile and interesting and as I was expecting. I thought after the Fed and ECB and all, with all the things that we've seen over the week, NFP will just boom. That wasn't the case. I guess markets were very, very cautious and nervous ahead of NFP after what we've seen the whole week. Yeah, so I'll call it day. Thank you very much for attending. No further questions. Yes, there are no further questions, so I will call it the date. And have a great weekend ahead and see you again on Monday. Bye bye.